Good morning. I'm with Terry Harbort, CEO of Talisker Resources. Talisker is TSK on the TSX. Good morning, Terry. How are you?
Hi, Robert. Very well, thanks. Always a pleasure to be on.
Yeah, let's get caught up with Talisker. A lot has happened since the last time we spoke. Financing is closed now, 23 million Canadian. The timing of the financing seems pretty good considering this week's volatility. What was the rationale for this financing?
Oh, really, it was a bought deal that came in through our major shareholders, and really with the motive of assisting us in really ramping things up. So we're at the stage now where we can accelerate our development and accelerating our whole production profile. So really it was a well-priced deal, rail market without any warrant, and really allows us to be unconstrained here in this ramp up over the next 1 to 2 years, and facilitate bringing our production profile forward by a whole 12 months.
Very good. So in September, you produced 862 ounces of gold from the Mustang mine. What can you tell us about October and the ramp up?
Yes, so we're mining at a slightly increased rate. So we're gradually increasing each month. I think we sort of average between the 200 to 250 tons per day. And just to clarify for everybody, we've got a currently permitted rate of 175, but it's annualized. So we're not constrained each day to only mining that days we can mine more or one mine less. And the concept of having it annualized, because we didn't really start mining until the middle of the year, means that we can mine a rate that's in excess of the average. So we've certainly been doing that and trucking a lot more material for processing.
So the goal is to eventually ramp up to 500 tons per day, but you need an amended permit to be able to do that, at an annual rate of 500 tons per day. When do you expect to receive the amended permit?
At this stage, our guidance from the government is between 6 and 8 months. So that realistically puts us at the end of Q2 or early Q3. Prior to that, we'll be able to do some development work. So basically developing that access that's not doesn't have constraints, and we need to get that access done anyway before we can target those zones, predominantly here in the Braylon West area.
So that's a very important point you just made, and that's probably one of the key rationales for the financing, is because you need to, really open up these new levels at the lower, Mustang and Braylon West. So tell us about that.
So yeah, look, I'll touch here on the lower Mustang development. For anyone who's been to a site tour at Braylon Mine, that's extending below the current mining levels, or the 1060 level at Mustang. It's the start of a spiral decline. We've completed that work down to the first lateral zone, which will be the 1045, so 15 meters below where our first stopes came out. And over the next month or so, we'll be starting that in vein lateral development there below the 1045. That ramp will continue below that then to access the 1030 level, and then other levels continuing below that. So that's at lower Mustang. In parallel, we'll be starting up here with the Braylon West development. So that's a significant decline. It's about 560 meters line, a straight shot from quite near the Mustang surface portal across to the new area at Braylon West. Once that we've made it across to there, then we start development on 2 spiral declines. So that gives us access. They're like corkscrews that we'll be able to extract material out from multiple levels at Braylon West. So at this stage, scheduling, we expect to have that completed by the end of Q1 next year, the decline, and then start on those 2 spirals. They'll likely be finished end of, well, at least the access points for the top levels by the end of Q2, and then we'll be ready once we receive the permit amendment in Q3 and the ore sorter, which we hope to have implemented by then, to ramp up that whole production profile.
So if all goes according to plan, the goal would be to, as soon as you get the amended permit, you can just go straight up to 500 tons per day in a fairly short period of time because you've done the prep work to open up all those new levels.
Yes, 100%. You know, the plan is to have all that development out of the way, so we can green light as soon as that amendment comes in from the government.
Okay, very good. And so just so investors have some idea of what to expect over the next few months, it sounds like maybe in October you did about 900 ounces of gold or thereabouts. When do you think we'll see the first month with 1,000 ounces of gold?
I don't know. I'd expect here it's probably it might even be this month. There's always a time lag from when we mine the stopes and when we process the ore and then when we mill the ore. But I think it'll be likely here either November or December, and then certainly as we're moving into January, I think we'll start to see that ramp up quite considerably with the total number of monthly ounces coming out.
Okay, and another key CapEx investment at Braylon is a new crusher and the ore sorting. Tell us about that and why that's so important, and maybe you can give us a timeline of when that will be ready.
Yeah, so we're finalising all the engineering on the ore sorter facility, and it's not just an ore sorter. It starts with a primary crusher and a secondary crusher that then leads into a full screening plant, and then a wash plant that removes the dust or the fines off the material, and then there'll be 2 ore sorting pieces or pieces of equipment. And one of those will be for a coarse crush, so sort of 150 millimeters, and the other one's for a finer one, about 40 millimeters. And then at the tail end of that, we'll have a tertiary crush, and that'll be crushing down to about an inch, so 25 mil, and that'll be the material that we're then sending on to onto Ocean Partners. So that'll all be self-contained in a big building or a big sprunk structure, have conveyors in between it, moving that material, so we don't have to move material using trucks and things. We can shift everything around on the conveyors.
So with the ore sorting, it makes the mining process much more efficient, and I imagine that also expands the margins for the company. Is that correct?
Yeah, so it has some pretty big impacts there, Robert. Firstly, on reducing our transport and milling costs, because we're basically taking the waste that's come from dilution when we mined out of the ore material. So on the run of mine testing that we've done, we expect to see about a 50% or so reduction in that waste material. So it'll likely halve our trucking costs. And then on top of that, it also has an impact of increasing the grade. We see increases of grade from between 80 to 100%. And that really becomes important on our payable because we have a scale payable. So the higher the grade, the more money we get paid out of it. So it has a double impact on those economics, and then ultimately on long-term economics, because it reduces what our cutoff grade is, and also brings all of our development, our lateral development, into being ore. So really, it's a fabulous addition to the whole mining and mineral processing components.
And you recently announced the acceleration of an ore purchase agreement with Ocean Partners. So now that's going to actually start January. You're going to begin, shipping the ore, the gold-bearing ore to them instead of the mill that's in the area. Tell us about why that's so important.
Oh, look, the main element of importance on the Ocean Partners deal is scalability. So we were constrained with the size of the mill at Nicola, around 200 tonnes per day. Now with this agreement, which is for up to 1,500 tonnes per day, it really takes the lid off that constraint. So really we can ramp up at will as fast as we can do our development to new areas, and then fast as we can do our mining. We aren't constrained by how much material we can process. So really that's a key element in our growth profile going forward.
Okay. And I know guidance is tricky, and I know this is a tough question for a CEO to answer, but investors always like to have some sort of expectation. So it seems to me that 2026 is really big year for Talisker, where you're going to eventually go to 500 tons per day, and your mining operations are going to become much more efficient with the ore sorting technology and everything else. So tell us about what 2026 will look like.
Yeah, so look, it's quite a good transitional year for us. We're removing a lot of the bottlenecks, so that's the development bottlenecks. We're also doing a significant amount of drilling. We've started a lot of that drilling, both from underground at the lower Mustang area, but also at surface at Braylorn West. So that's to allow us to have enough M&I category material brought into the mine plan, both accelerate and also have a good solid base there for that development. So really that'll be a lot of the hard work the team's doing in the first 6 months just to set us up to support that transition to 500 tonnes per day and onwards. Like the end of next year, we'd like to be getting close to 750, and then as we come into 2027, starting to hit that 1,000 tonnes per day there for Mustang. A bit of engineering and scoping work as well that we've already started, but it'll come into focus next year, and it's looking at access and the portal for the Olympus mine, where we're looking at putting that in. If all goes well, we might look to start some portal construction and access development in there. I think that's very important. And towards the end of the year, after we've run the ore sorter here for several months, start to do the planning and engineering on the right sizing of our mill. So we expect that's going to take a couple of years with engineering, permitting, power, all to go in. So really we want to get to the point where once we know the maximal rate of Mustang and Olympus, the impact of the ore sorter, how much waste material does it extract from the ore, then we can really focus on right sizing that mill and starting the process to be able to bring that in.
So you said a goal of 750 tons per day by the end of 2026. So just some back of the napkin math, and maybe even being a little on the conservative side, that sounds like 75,000 ounces of gold per year. Is that a fair estimate? Is that the goal?
Yeah, certainly by 2027 and onwards, I think we'd like to be achieving that or more throughout the course of 2027.
Final question, Terry. How should investors view Talisker? What's the size of the opportunity here, and what is the long-term vision for the company?
Yes, look, our long-term vision is to be able to develop multiple mines across the Braylorn district and have an aim to get to 200,000 ounces plus of annual production. And the first stage of that is really Mustang. It'll eat up half of that production profile. So let's say if we look at comparables of other companies that are producing 100,000 ounces, then they're sort of in that $1 to $2 billion range. So that's the sort of growth profile that I think we can look at within the next few years. And then look at companies comparable that are producing more than 200,000 ounces, then they're really in that sort of $3 to $5 billion range. So I think that's a fair assessment of where we can grow to over the next 2 to 5 years.
Terry Harbort of Talisker, thank you so much for your time.
Thanks, Robert. Always a pleasure.
Cheers.